So what's up, man? Appreciate you being here today. We
Hey,
got
Josh.
the $75 million man with us today, and we're gonna call you
No,
that. I know you're gonna
No
tell
one's
me you're not.
ever called me that before.
The
so,
75
I'm gonna
There
run with it.
there was back in the day the $10 million man.
Yeah. Times have changed. The
Yeah.
$75 million man, Josh Ferrari. Let's go. Come on, 3 Beach Capital. How's it going, man?
I give myself a round of applause.
Man, you deserve it, bro. I'm telling you, I want to be Josh Ferrari when I grow up, okay?
Yeah.
I'm just working on it. That's all I'm trying to do.
I'll have to go back in time, but
Yeah. When you grow down, you're going to
Yeah.
be Josh Ferrari. Yeah, exactly. Josh, so listen, I want to jump right into it. And thank you for being here today. I've got a couple notes here, but something we got to start with. How does somebody do their first deal? And correct me if I'm wrong anywhere, but how does anybody do their first multifamily deal in December of 2020 and in less than 4 years owns $75 million worth of real estate? I mean, because that doesn't happen to most normal people or anyone.
Yeah,
That's
that
a
is
pretty,
not normal.
That's a pretty big accomplishment, and I think we need to just start off strong right there.
So how does someone do it? Well, you don't do it by yourself. I can promise you that. I tried this real estate endeavor by myself when I first got started. And a lot of that just came down to the fact that A, I didn't have any money, and B, I really didn't have a network. You know, you're surrounded by, I was fresh out of college. I was just married. So I'm surrounded by a bunch of other folks that are fresh out of college and newly married. So we're all broke as a joke. And you got your coworkers, and with a new career that I was starting in aviation, I wasn't making a lot of money. So just all around wasn't surrounded by people that had a lot of money. So when we first got into real estate and I realized it was something that could be for me, then the wife and I tried wholesale. To think that was going to be something that was going to get us just a little bit of money, just, $5,000 here, 10 grand there. Eventually we'll stack up some cash and hopefully we'll be able to buy something.
Yeah. Was it that easy, by the way?
What's that?
Was it that easy just to go out and get 10,000 here, put a couple wholesale?
No.
Of course not. 6 months goes by, I didn't close a single deal.
Right.
And I realized that I was clueless and that I really didn't even want to do wholesaling anyway. I wanted to own real estate. So we pivoted and decided to buy a fourplex as our first legitimate investment. But it was just the wife and I. And I figured, I needed to have 100% ownership in that deal because I needed all the profits. I needed all the money potential that was there when I bought this investment. And 100% of the reward is also 100% of the risk, and it ended up being just a big fat flop. And anything that could have gone wrong basically went wrong. Lost about $60,000 on that investment, and then realized from the loss and from the pain from that what we didn't want to do, which then led us down the path of what we needed to do to be able to achieve what we wanted. Once we got clarity around what that was, so it was February of 2019. We made the decision to focus solely on larger commercial syndications through multifamily. So then I tried something a little different. Now I actually tried to get help.
There we
No
go.
longer was I going to try to figure this thing out on my own. I couldn't, really didn't have much money, but decided to go out and hire a mentor, which was probably the best investment I think I've ever made. Now you got to find the right mentor. Everyone's going to say you need someone in your corner, and that's true, but you don't want the guy who barely graduated, second grade to be your mentor. Like he didn't go any further than that.
Or the guy who doesn't own anything, by the way, because in the social media age, there's a lot of people. I mean, by the way, I had somebody, just to jump in real quick, I had somebody the other day reach out to me on LinkedIn, and he said, hey, I want to talk to you. My business is teaching real estate guys how to be, mentors, how to put on classes and train other people how to buy real estate. And I'm like, bro, I own 53 doors with my partners. Like, we're just getting warmed up. I'm like, I'm not trying to teach anybody anything yet. I'm like, talk to me when I got the jet and I got the, 2,000 units, or when I'm the $75 million man. But I said, wait a minute, because I'm not ready for that. But there's a lot of guys out there that
There's a lot, especially
a lot more
now.
talking and not a lot of doing, I think.
Don't follow the guys that aren't living your dream or living the dream. Yeah.
You got to
So you
find
got a
someone
mentor.
that's like to a T done exactly what it is that you want to do. You don't want to follow the guy who hasn't yet quit his day job, but your goal is to ultimately quit your day job because they haven't actually mapped out how to even do it themselves. So how are they going to be able to teach you how to do it?
Yeah.
So on and so on. So I found someone who had some immense experience. It just so happened that he was also local, which was a huge benefit. And it was a very personal relationship kind of structure that he had created. I mean, literally the guy only helped 3 people, me and 2 other guys. So it was so personal to the point that we knew each other's wives, kids, broke bread at each other's houses. I mean, he physically introduced me to various like investors, lenders, brokers, all within the area that we were in, which is Southern Alabama at the time. And then he even went so far as to sell me my first deal.
Oh, wow.
After
Wow.
like 2 years of trying and failing and trying and failing and trying and failing and going through all these LOIs and offer processes and underwriting all these deals, he's like, look, man, I see you've been struggling. I see you've been grinding. I got this deal. It's ready to come full cycle. And tell you what, I'll give you a $450,000 discount if you can close it before the end of the year and we don't have to go through a broker. I'm like,
Wow.
you betcha. Send me all the data you got on that one.
How many
And,
units, Josh?
There's 42 units.
42.
So long story short, we ended up closing that deal. That was December of 2020, our first ever deal. Closed it on the last business day of the year because we really wanted the depreciation.
The depreciation. Yeah, there we go. Hey, Josh, let me stop you right there. So first of all, to back up, what were you finding the first 2 years? It was basically, you said February, I think 2019, and then it was December of 2020 you ended up closing. So roughly speaking, 22, 23 months. But during that time that you were striking out, what was the difficult thing? Was it getting sellers and brokers to take you guys seriously because you hadn't bought something yet? Was it that you didn't really have the means to pull it off, or what were the challenges there?
It's a big combination. So this would have been, like you said, 2019, 2020. So the market was fairly hot at that point. And it was just getting ready to get even hotter when COVID hit. So it was hard to be competitive because we'd never done it before. So it's hard to get anyone to come out and be like, yeah, you're the guy that's going to close a multi-million-dollar deal. Right. You've never done it before. So, but then on top of that, it was even hard to get access to the deals in the first place. So even once you got access to the deal, it was almost like it was the scraps. It was the crumbs that no one else wanted anymore because the deal didn't make sense. And so now you had to try to figure out an extremely creative way that it could make sense so that you could actually finally get into your first freaking deal. Now, I think a benefit that you get when you're starting out is definitely focusing on smaller deals. So don't immediately jump out the gate and be like, I'm going to buy 100, 200, 300 unit complexes because that's where all the massive amounts of competition is. There's still competition on the smaller deals, but it's a lot smaller, like a lot less competition. Now, this deal that we bought, granted, of course, it was my mentors. So he just directly sold it to us, but it was in a market that was so beyond tertiary. It's not even funny. So it was 30 to 45 minutes outside of Mobile. Mobile is already a secondary market. Population at the time was maybe 300,000 people. And 30 to 45 minutes out, it's this little town called Citronelle. And its population, 6,000 people.
Woo, 6,000. All right.
Literally the whole area only had 2 multifamily complexes in it. And we were buying the biggest one. The other one was a 24 unit and it was somewhat dilapidated. So we knew if we could at least make our unit somewhat nice, just barely, right, that we could
rent it,
have a monopoly on the area and hopefully get some good renters in there. Now, a lot of market dynamics helped us actually achieve success with that deal, but anyway, getting on a side tangent. During the time frame of not being able to be successful during those 2 years, some of it was lack of being able to raise the money. I felt like in my early years, so it was almost like lack of confidence to be able to go out and submit an offer for a high-priced deal that I wasn't sure if I was even going to be able to achieve success on. Because reputation is everything too. So you don't want to go up to the broker and say, hey, look, man, I'm going to do everything that it takes to close this $2 million deal, and knowing in the back of your head that that's probably not possible for you,
right?
Unless you got additional outside help, which. It was me and one business partner at the time, me and Reggie, and we were really wanting to do these deals just on our own with no one else. And we were like, can we raise like $500,000 for this deal? I don't know. Maybe. We've never done it before, but we'll see. We actually got under LOI during that 2-year time frame, probably like 6 or 7 different deals.
Wow.
And for one reason or another, every single one of them fell apart. We didn't actually lose any money in the sense that like earnest money was hard, but they all just didn't pan out.
By the way, so what was the range you were looking at? Because you mentioned, smaller deals versus big deals. I would say a 44 units, a pretty decently sized deal. That's where you ultimately started, and it worked out through, what was going on with your mentor. But when you were tying deals up, what were the size of the deals? Were you guys looking at duplexes, 10 units, only 20 units and bigger, or what were you guys?
I think the smallest deal we got under contract was like a 22 unit.
Okay.
And the largest deal we had under contract was a 56 unit.
But see, I want to unpack that a little bit because, there's a lot of people. I mean, even how we started, right? We started with a couple little houses and then a triplex and then a fiveplex and a 12 unit. We gone that slow step. And so it's really cool to see somebody that just said, very matter-of-factly like, no, I'm going to start with 22 units or bigger. I mean, that's what you guys were looking at, right?
Well,
ultimately he started with 44, but I mean, when they were out looking.
And Josh had the fourplex the first time.
Well, and maybe that's why, because
Yeah.
you had the bad experience on the one and you said, screw it, the next one I do is
Yeah.
going to be a big deal. But you know, it's interesting to me. So what was your guys' mindset? Was it just that you figured, hey, if we're going to do this, let's do it right and let's get something that's got some scale to it?
Yeah, so I had enough failure at that point that I realized if we're going to do a deal, we need to make a substantial amount of money because I've got to dig myself out of the $60,000 hole that I'm in.
Yeah.
So the act fee's got to be big, the cash flow, like it's all just got to be big. And whatever we got to do to make that happen, let's make that happen. On top of that was a combination of my business partner and my mentor helping to just kind of expand my own personal mindset. Yeah. So we created what we called our vivid vision. We still call it way back when we were kind of in the early processes of building this out. And I remember writing it myself first and then bringing it to Reggie and then soon to be Matt after the fact and being like, hey, what do you guys think? You know, this is where I think we're headed. This is what I think we can do over the next 3 years. What do you guys think? And at the time, they basically doubled all of the goals that I had written down. So like my goals, I think it was like 50, we can get to 50 million assets under management in 3 years. We can have, it was like 500 units or something like that. Yada, yada. Yeah. And they looked at it and they were like, I like it, but I think you're thinking too small. I'm like, wow, how am I thinking too small? We've never even done a deal yet.
By the way, Josh, those are the partners you want. I mean, I love that your partners were
found the right partners.
I mean, those are the partners, right? Because had it been the opposite, that you said we're going to do 50 million in 3 years, and your partners looked at you and said, no, let's tone it down a little bit. Let's do 10 million or 15 million. I mean, you know, that's a totally different thing. Like that tells me you were in business with the right, or you are in business with the right partners. That's fantastic. That's great, man.
Yeah. So they were like, why don't we shoot for 100 million? And I'm like, you guys really think we're going to be able to hit 100 million? Like, is that realistic? And they're like, I don't know, but if we don't shoot for it, we'll never know. Yeah. And Matt's always been great at asking for the things that I think other people are somewhat afraid to ask because they think it's like a slap to the face offer or because they think it's like rude to ask. He's never cared. He's always been the guy that's just been very straightforward with you. And he's like, look, if we don't ask, we'll never know if we're even going to get it. Like if I don't ask, they want $10 million for this property. If I don't ask to buy it for $100,000, I'll never know if they were going to say yes. So I'm just going to ask and then see what happens. Like create some ridiculous offer. And granted, we've never got any ridiculously steep discount like that, but there have been some deals that we've gotten at a discounted price or with more favorable terms because Matt's not afraid to be savage and ask for ridiculous discounts on properties and talk to people and ask ridiculous questions.
Wow. That's great, man. Yeah. And Matt's the one that has the real estate background, right?
Matt's the one that is actually an agent. Yeah. So he's basically making offers all day, every day, but it's been on the single family side. He focuses on short-term rentals for his clients. Gotcha. And so I think he had invested in a deal passively once before on the commercial side, but he'd never done anything actively. And he was like, bro, if we're going to make this work, we're going to make this work. I think some of that just comes from his background too. He used to be a fighter pilot in the Air Force for a long time.
Go. Okay.
So they
fly fast, not slow. Yeah.
And they never care about anyone's feelings. Yeah. And then on top of that, he actually had this super rare blood cancer at one point.
Oh, wow.
That's what took him out of the military and then into real estate. And so I think all of that combined is just like life's short.
Life's short, let's roll. Yeah.
So Josh, you put together, you said this vivid vision, and this was put together with your team before you close on that 42 unit deal. You had that in place.
Correct.
Yeah.
Yeah. So the vivid vision, it's kind of like a foundation. I call it the foundational building block of the business because what a lot of companies do is they don't get really crystal clear about what they actually want. So they can't have the focus and clarity that they need.
That's right.
To actually go after that. Really the big picture of what they think is I just want to make a bunch of money. I want to get out of my day job. I want to spend more time with family. And those are good goals. You know, they're like, what is your why? Sure, those are good goals. But if all you understand is why, then you don't understand what. You don't understand how. You don't understand who. You don't understand where. You don't understand the other questions that you need to understand. And then honestly, everybody else does too that's going to be in your inner circle helping you achieve those goals so that everyone can be on the same page, excited, motivated to actually accomplish what it is that you're looking to. So Josh, I was just lost in the sauce, basically.
Lost in the sauce,
not having that put together before.
Well, and even sometimes we talked about it with our two other partners. You know, we've done, you know, some interesting things for the last couple of years, and We're not $75 million men yet, but we don't have a written business plan or a vivid vision.
Right.
And it's something that we've been talking about where we kind of feel like even though we all sort of share the same vision and we kind of go through and we kind of know what we need to do for our business, we've never really articulated that, and we haven't really drank the Kool-Aid together, and it's not on paper, and so I'm very curious, in terms of like when you guys sat down to do this. Well, I guess you did it first and you showed them, but was it, are we talking about like a 15-page business plan with PowerPoint slides and all kinds of things? Is it very similar to what you would think of as a business plan, or maybe break down a couple of the some of the low-level details for some of the
No, so
audience
I put it together like a newspaper article. So I wrote it as if it was in third person, as if some third-party journalist or reporter was writing about me and my company 3 years into the future. So anything past 3 years and you're just being unrealistic with yourself. Like you got no idea what's happening 3 years from now. If you had said at the beginning of 2020 where we would be at the beginning of 2023, everyone would just laugh at you. Yeah, sure. COVID and entire world shutdowns. Like, yeah, right. That's going to happen. Market's going to get so hot you can quadruple your money in 6 months. Right. So you never really know. A lot of the how within the vision itself is likely going to change. We don't even really know what we're going to eat for breakfast tomorrow. How can we know what we're going to do to build a multi-million-dollar business over the next 3 years? So 3 years is a good starting point. So what I did was I first sat down and I thought about what were some of the personal goals that I wanted to accomplish. I always like to build my businesses around the lifestyle that I want to create instead of vice versa. So the wife and I actually went on this retreat. We took about a week to go to the mountains of Tennessee in the middle of nowhere, get away from Wi-Fi, get away from the world, just have beautiful mountainous views. We love hiking. We love all just outdoorsy stuff. Had the hot tub, the whole nine, right? So we got out there and we just really had some time to clear our minds and think about what were some of those personal goals that we wanted. Now, at the time of writing this, I would have been 22 or 23. So we were asking questions like how many kids do we want to have? When do we even want to start having kids? Where do we want to live? What kind of vacations do we want to take was one of the fun questions we got to ask ourselves. Like, well, this vacation is pretty nice. We should go on more vacations like this. Okay, well, this vacation is only a week long. You want to go on week-long vacations, month-long vacations, quarter-long vacations. If you want to go on a 3-month-long vacation, you got to have a business that actually runs and operates without you for that amount of time.
Right.
Which means you also need to have a business that produces income for you without your need to be involved. So much so that not only can you take care of your primary expenses, but you can take care of all of your vacation expenses while you're gone for 3 months as well. So those were the things that we were thinking about and enjoying coming up with is conversations that I feel like most couples and business owners just don't have.
They don't.
So once we had that and I had all my personal goals written down, then I thought, all right, what business do I need to build to help me accomplish this goal? So when we were doing those personal goals, I still didn't know that I wanted to do syndication. I just was like, something in real estate is going to help us achieve this goal. I don't know what it is yet. I don't know what we need to focus on. I'd heard about syndication a handful of times, and I knew multifamily was kind of the way to go, which is why we bought the fourplex, but I wasn't sure at what scale or what level or how that was even going to look for us because we just lost 60 grand. What the heck are we going to do to be able to actually be successful? So it was through the personal goal setting that we realized syndication is what we needed to do to achieve the goal. But it wasn't just a need either. It was also just something that sounded exciting. Like, okay, syndication. That actually sounds kind of fun. Raising money from other people and buying really big deals. Wouldn't it be nice to be the $75 million? No, I'm just kidding. Wouldn't it be nice to be able to buy a bunch of real estate and say that I'm a multimillionaire? Like, that would be freaking awesome. You got to pick something, a niche of some sort that actually excites you. Because if you don't, then it's always going to feel like work. You're going to get burned out. Because it's bound to happen as an entrepreneur in any business, especially with the ups and downs of business cycles and real estate cycles. So once we got clarity about the personal goals, I wrote the business goals out, and that was when I brought it to Matt and Reggie, and they looked at it and they were like, "This is pretty neat. Sound like I like a lot of what you've written down here, a lot of what it is that you would like for us effectively to accomplish, and I mesh with well. Also, I would effectively like to do all the things that you've written down here. I just don't think you're thinking big enough." And I was like, what?
Wow.
And that was when they said we needed to go to 100 million. We needed to buy more units. We needed to make more money. And I'm like, all that stuff sounds great. But guys, I've only ever lost money in real estate. Like, how is it realistically going to happen in a 3-year time frame that we get to this point? And they were like, they kind of maybe grounded me a little bit in the sense that they helped open my eyes because both of them had been already successful in the real estate space. They were both, Reggie had seen tremendous success in the single family side. He had a fairly sized, but maybe like 50 different single family units he had that he ended up liquidating and then dumping that money into the multifamily commercial side of the business. But so he had seen some success and was making some good money. Matt had already made over 7 figures in commissions just being an agent. So he had seen some success in real estate and he owned a couple of short-term rentals. And I'm like, you guys, that's why you're thinking so much bigger than me. Like I've never made that kind of money before. So I can't even fathom it. And they're like, oh yeah, I mean, making this kind of money is just sustaining our lifestyle.
Yeah.
Okay.
Set the bar high
that's
there.
what
There
we
we
need to
go.
shoot for.
Oh man. So wait, so then Josh, then once you presented it to them and they said, hey, you're not thinking big enough, and you said, well, maybe I'm not. Okay, so 100 million, let's go. Now, did you guys sit down at that point and start reverse engineering? Okay, if we're gonna get to 100 million, we got to do this much year one, this much year two. We got to write so many offers. We got to meet so many people. We're gonna need 300 investors to get to that number. I mean, did you guys start packing in that much stuff to your plan? And I guess the second question would be, then have you modified the plan every year or every so often as things have changed? Or maybe walk through some of that if you don't mind.
So as far as the written down plan, we haven't actually modified that because I like to see the raw unedited version of it from when we first created it to like what's actually come to life 3 years later after writing it. And at this point, I honestly need to write another one because it expired at the end of 2023.
Yeah.
And a lot of it came to fruition. Now, I said we were going to have 100 million assets under management. We don't. I said we were going to have 2,000 units. We don't. But I said we were going to be making $50,000 a month in passive income, and we're making more than that. So that was the primary core goal we wanted to achieve anyway. So we met that goal.
By the way, how does that feel? So you start off on your first fourplex with your wife. You lose $60,000. Now, 3 years later, your team's making $50,000 a month in passive income from your investments. Basically the equivalent of what you lost on that first deal every month.
On a monthly basis. I mean, it feels fantastic. It feels nice knowing that all the work that we've had the chance to do, all the work that we have done, because it's sacrifice. Building a business like this and growing it and scaling it and being on social media and raising the money and managing the deals and hiring the managers and vertically integrating if you ever wanted to do anything like that. And I had the podcast going, I was doing that. And I mean, there were times that I didn't even get the chance to see my family. Like days that you work 12, 13, 14 hours and your wife's like, what the heck? Like, thought we were married and trying to like enjoy life. And I'm like, I mean, we are, but we can enjoy life even better when we're doing better and we're making more money and we have more time to do things because the company will be not entirely self-sufficient, but it won't need me as much as it does now in the early phases. So it was a lot of sacrifice early on, but it feels good knowing that all of the sacrifice that we took, because really early on it was tough, especially in the midst of losing 60 grand with the fourplex. That whole cycle of that deal probably lasted about 2 years. We bought it in August of 2018. We didn't sell it till like January of 21.
Wow.
So roughly about 2 years, 2.5 years, we owned that investment. So we didn't actually like realize the $60,000 loss until after we had closed a multifamily deal. But we were in the thick of knowing that things were going sideways and tanking quick. We were just hemorrhaging money every single month. So during that process, you see, especially at the age of 22, 23, newly married, you see all of your colleagues on social media that are going on awesome vacations. Yeah, they're going to Europe, they're going to Florida, they're going to all these places and enjoying
the new car, the new watch. They're right, whatever they're doing.
Yeah, they've got the new house, the new cars.
Yeah,
they're starting to have kids, and I'm like, good Lord, I can't even afford for us to go on a date on Saturday. Right. Like we're barely making McDonald's work. And all these folks are having these awesome, extravagant, like that's the life we wanted to live, right? You play the comparison game, which is never what you should do, but it's always what all of us do. Let's just
hard not to do. Yeah.
And I just felt like such a failure. So to come from that to get to the point that all the sacrifice was worthwhile. Yes, we didn't get to enjoy all the stuff in our early 20s, like everybody else seemed to be doing, but now I get to live life like they can't live because I made the early sacrifice. So it definitely feels good.
Yeah, that's great.
Man, I love that.
I was going to say one thing. So it sounds like, I mean, Josh, the vision that you guys set forth, it sounds like, maybe this is a rhetorical question, but you feel like it wouldn't have happened if this wasn't in place, if you actually hadn't put this in writing. I mean, that's
a good question.
Yeah. Well, yeah, that's a great question. Would you made a goal to get to 100 million, you hit 75 in that same time period. Now let's see what the next goal is. But I guess to follow up on that question, if you wouldn't have had a clear alignment on your goals and that vivid vision, do you think you would have hit 75 million, or would it have been 50 million, 25 million? What's your best guess?
Well, and I'm just going to say one thing, Josh, and it sounds like, to me, listening to you, that this made all the difference in the world. But yeah, please.
Yeah, I always like to say that it's not the end all be all. You don't write something down on a piece of paper and suddenly you achieve massive levels of success. There's a lot of work that goes into it.
Right.
But having the focus and clarity in a unified manner between you and your business partners and any future employee, like between everybody that's going to be involved in helping you achieve that success, is instrumental to anyone's ability to be able to grow and get there, because a lot of people don't even know what you're all about. I usually like to use the example of FedEx's mission statement, because what most companies do is they just create a mission statement. Well, FedEx is like, we deliver packages across the globe on time. Who on earth cares about that? Well, the consumers, who are like, sweet, I get on time packages, and the CEO, who makes billions of dollars. None of the employees within the company actually understand what that even means. So why should they be excited about helping the company actually achieve those goals? They're the ones actually being the integrators, doing the work to help the company do that. But
that's true.
What does that really mean? And so a baseline mission statement for a company, I've never thought has really been that sufficient or sufficient enough for everyone to be on board and understand where you're headed. I mean, even the CEO might have this like grand idea in his head, but he's never told anyone about it.
Of course.
No one really knows how you're going to be able to achieve the goal, or where the company's like what the company's going to do to achieve the goal. So when you get the chance to sit down and answer a lot of those questions, it kind of gets your creative juices flowing. I think that helps your ability to be more creative in the way that you actually achieve success in your company. One of our core values, we like to call ourselves an outlaw of normal. We're not necessarily contrarians. We don't just do things differently for the sake of doing things differently. But there's almost always one or two things that you could do differently in your company that others aren't, that's going to help you accomplish your own goals and achieve success, create the lifestyle that you want to live long term. One of the biggest things that we did was we created that perpetuity model. Before we had written that document, I would have never been able to sit down and actually think about something like that, because all I knew was I just wanted to make a bunch of money. But once we sat down and realized we wanted passive income, more time with the family, more time with the kids. Each one of us I got 2 kids, Reggie's got 6 kids, Matt's got 4 kids. We all got kids, right?
Yeah.
So we want to spend time with them. We want to travel. We want to do other things outside of just work. And the only way we're going to be able to do that is if we didn't have a transactional based business. Well, for anyone out there that's ever been a syndicator or knows anything about syndication, it's very transactional. And I was sick and tired of that. I didn't want to go and buy deals and trade them every 3 to 5 years. That didn't make sense for us. So how do we buy an asset that we get the chance to hold on to long term? I'm already going to do all the work to stabilize it 2 to 3 years. How do I hold on to it long term? After we had the chance to sit down and think about what that looked like, that was when we were able to come up with the perpetuity model, which has revolutionized the way we've been able to actually make money. I mean,
And
Josh,
I have an idea what it is, but for the audience listening, let's break down the perpetuity model. How does that work? What's the big benefit to the investors? How has this been a success?
Big picture, it's a 20 to 30-year hold. So instead of it being 5 to 10 years that most folks do, we actually get the chance to hold on to it long term and benefit long term from some of the cash flow that you'll be receiving at that point, which will be pretty significant because you stabilize the asset within the first 2 to 3 years. Now, it's not an illiquid investment. You're not totally illiquid as the GP or an LP in the deal during that time frame. I'm going to give you 100% of your cash back by the 2nd or 3rd year through some kind of value add strategy where I get the chance to actually execute on a liquidity event, some kind of cash out refi that gives you all of your initial investment back. Once you get your initial investment back, you have no more risk or skin in the game. Now, I'm not going to kick you out of the deal. I'm not going to say, screw you. I want you to benefit in long-term cash flow and benefits just like I get the chance to. But I want the majority share of the cash flow at that point because I've done all the work to actually get it to that level. So I'm not going to take any of your equity. You're going to keep your lion's share of that, whatever your pro rata buy-in percentage was, which is just anything you're going to get on a K1 every year. But what you're going to get long-term is probably around 3 to 6% of your initial investment is usually what it averages out to be. So if you give me $100,000 for conversational sake, 3 years later, you'll have 130. And then after that, you'll receive about 3 to 6 grand in perpetual cash flow after that.
Just coming in.
After the 3rd year, you get 30% of the cash
Right.
flow. And I take 70% of the cash
You take
flow. So any
70%.
future refi proceeds, any cash that gets distributed by the property during that time frame, and then when we ultimately decide to go sell, I also get 70% of the upside. Now you still get 30%. So you're still going to get to benefit from everything that happens with that deal long term, knowing that you literally have no more money in the deal. And the money that I gave back to you at year 3 was a completely tax-free like recapitalization because it was through a refi, not a sale. So now you're able to take that money and reinvest it into another deal, which is what most investors do. They just give it back to us, and we just put it into
Put it
another
in,
investment,
keep rolling,
and we
keep
just
rolling.
keep
That's
going.
fantastic. Yeah.
No, I think it's fantastic.
That
I mean,
is
because a lot of times when people come into these deals, you're right. The syndicators are doing five-year deals, 7-year deals, 10-year deals, whatever, meaning that the people know they're not going to get their principal back for quite a while until it sells, right? Maybe there'll be a liquidation event or refinance. But I love the fact that you guys said, no, we're going to come in, we're going to force the appreciation, get the value add, and within that 24 to 30 months, 36 months, whatever it is, you got all your money back. And like you said, now they can reinvest that. So, I mean, to me, what a great way to grow a portfolio, you know? And I'm sure, so when you announced that or went to that, I mean, you weren't doing that your first couple syndications, right?
No, so the first 2 deals we did, we hadn't actually created the model yet. So even
Okay.
though we'd already had the vision written out and everything was clear, right? We still hadn't actually bought a deal. So it goes back to you kind of don't know what you don't know. You create the
Right.
vision, you create it as best as you're going to create it. But once you actually get into the business and start doing some things, you see some of the areas that may have lacked within the vision, some things that maybe need to be tweaked. And a big thing for us was the model we chose to execute on. So the first 2 deals we did was traditional syndication, your 5-year flip, double your money in 5 years. And we were actually able to accomplish that goal in a 16-month time frame on our first deal on that 42 unit.
Wow.
And then the other deal we bought, we actually still own. We haven't sold that one yet. But then after that, after the second deal, and we take it. Now we've done this twice. We've raised money twice. We actually have gone full cycle on the deal once. We were like, you know what? This is a crap ton of work. There is a ridiculous amount of work that goes into actually being able to source the deal, raise the money, close the deal, and that's just acquisitions. Then operationally, gosh, you're dealing with contractors, you're dealing with property managers, you're dealing with tenants, you're dealing with lawsuits, you're dealing with, oh my goodness, so many things.
A lot of stuff.
You buy class property, right? Hence why we don't necessarily like the lower class properties anymore, but lessons learned, right? So realizing how much work it was, that was what gave us a little bit more clarity and saying, guys, we're working more now than we were in our W-2 jobs. Like we were even still working our W-2 jobs, but it's like,
And now you're doing this on top of it. Yeah.
So much more than we thought we were going to. And so we've got to systematize. We've got to build out some processes. We've got to streamline a lot of what we're doing so that we can free up a lot of time for all 3 of us. But then even on top of that, there was something missing. And what was missing was like, we're reliant on deals transacting
That
to
next
make
deal, that next
big
deal.
swells of cash
Right.
that allowed us to progress. And that didn't sit well with any of us. And we were like, all right, well, how do we structure this where we don't have giant fees? Because less your fees, the higher returns for the investors, the easier it is to actually raise the money. And so we're like, okay, how do we lower the fees but still make them commensurate to the work that's actually being put into this? And then also give us a structure that cash flow, like large lump sums of cash, is able to be put in our pocket on a consistent basis. Because then we've made it, right? Then we actually have true passive income, which is what everyone says they want. But then they go out and create transactional based businesses that aren't passive at all.
That aren't passive, yeah, 100%.
And it confuses me.
Good point. Yeah.
Josh, how many deals have you actually purchased since then? Since that first deal in December 2020, how many have you guys done?
Since that first job, I believe we've done 14 transactions.
14 transactions.
Wow. Okay.
Okay.
So we averaged about 1 to 2 a quarter between 2021 and 2022.
Okay.
And then the market started shifting. And in 2023, we only did 1 deal. And then this year, we've only done 1 deal.
Okay.
So definitely.
Yeah.
Transaction volume is lowered significantly.
Of course. I think everybody's kind of in that
looking.
same boat right now with interest rates. But you guys are looking. You guys aren't like on the sidelines like indefinitely. You're just like everybody else waiting for the right deal right now.
Yeah.
So one of the things, Josh, we really got to talk to you about is raising capital. We know that, you teach others how to raise capital. Obviously, you and your partners have done a great job in raising capital, thus the $75 million man. And so I guess to start it off is, what's the secret, if there is one, to raising large amounts of private equity or private capital?
I don't know that there would be a secret. The part of it is time. So you've got to give yourself enough time to be able to build these relationships with people so that they can even know, like, and trust you in the first place and want to give you any money. So there's a time aspect to it. You can't just jump out there immediately and suddenly think you're going to be massively, incredibly successful.
Yeah.
Now, how much time that is for each person is entirely different. I mean, some of my students have literally raised 16 million bucks their first 30 days of the drawing. So their time
Wow.
was really short.
Yeah.
And others, it might take a full year before they even get the chance to raise $1 to $2 million. So timing is one of it. Another one is branding and marketing. So there's the trifecta of know, like, and trust. Now, if no one knows you even exist, they're not going to invest with you. If no one knows that Apple's a company, no one's going to buy an iPhone. Like, if no one knows these things exist, nothing happens. So you've got to market yourself and brand yourself. The best way to do that, especially for free, is through avenues like social media. There's so many different platforms out there now. You pick one that meshes well with you, your brand, your personality, and then you just be consistent, man. I mean, there's things to talk about when it comes to posting strategies and what to post and when to post and how to post and what platform to post on, and do a video today, or just a selfie today, or what were the hashtags today, am I polling today? There's some things to be said with strategy, but big picture, if you are consistent and 100% authentically you
Right.
on social media, you're going to attract the people that want to be involved and around you anyway, that want to invest with you, that want to partner with you, that want to have something to do with you and your company. So then
And
they get the chance to know how they know you exist. Then you get to build the likeness through the level of consistency and the content strategy that you actually have chosen to post. And they're like, I actually like what this guy's saying. I like real estate.
Yeah.
I like that he loves skateboarding. I like that he's in aviation. I'm a pilot. I love aviation. And he loves real estate. I love real estate too. This is so cool. I want to follow this guy. I always like to say social media is kind of like your own personal reality TV show. You want people to be sitting on the edge of their seat, passionately awaiting the
Tuning
next
in.
episode to
Yeah.
be released.
What's Ferrari going to do next? What's Clooney
Yeah.
going to do next? Let's go. Come on.
Exactly. And the next episode is literally just the next time that you post something. Even if it's just like a short or a reel or a YouTube video or a podcast that you send out.
So Josh,
or
real quick, so you would say then you're not going back to not being transactional, right? So you're not out there every time you make a post, hey, go to my investor portal, or here's how you can invest with me, or DM me if you want to invest. By the way, maybe you are tagging some of it, some or most of your posts with that. I don't know. I do follow you, so I see a lot of your posts. But, I mean, what is the strategy there? Because you see a lot of guys that go on, they say, I'm going to raise money on social media, right?
Yeah.
And they go out there. Every single thing they do is like, do you want to invest today? Do you want to invest? Hey, I can take some money from you. You know, and I feel like people feel like that's a little disingenuous, because it's like they don't want to just hear like a guy trying to sell them constantly,
More
right?
transactional.
Yeah.
Right. It's you're not a genuine person. You're just a robot, basically, at that point, always trying to get the next sale.
Yep.
You're not connecting with them emotionally. 95% of the world population buys on emotion. Yeah. So the best way to connect with folks emotionally is to kind of get on their level. The best way to get on their level is just to be you. Like, you are also experiencing things that they're also experiencing. We're all human beings. We experience a lot of similar things. Everyone's situation is a little bit unique, but like, hey, I went to high school. I went to high school too. I went to high school too. A bunch of people went to freaking high school. So you
Greg almost went to high school, but you know.
I went to high school.
I
I
went
went
to
college.
Oh.
Yeah.
I had to start from the bottom and climb the corporate ladder in corporate America. So did I. Like, a bunch of people had to do those things. A lot of people's stories are a lot more similar than you think. You just connect with the type of person that you want based on you. And I always say you have to be authentic, because if you're not, it goes back to what we talked about earlier. You get burned out. Yeah. Then you're not consistent anymore. Now you're not on social media anymore. Now you just hate it. You just hate social media because it hasn't worked for 2 years, and you've been consistent with it. It's not working. And it's because you haven't been you. You're attracting the wrong people. Then those people actually get the chance to have a conversation with you.
Right.
They realize you're not who you showed that you were on social media.
Mm-hmm.
Now they feel like you're a fake person. They don't trust you anymore. Now they're not giving you cash.
Yeah, I think people see
time.
that, Josh. Yeah, people see that, instantly, that you're not being authentic, and, again, you're not, gathering the people that you need to, because they know you're not being authentic.
Oh, 100%. I mean, that's everything. I mean, Josh, so what's your social media platform of choice?
My platform of choice has always been LinkedIn, because it's very business focused. Now, over the last month or two, they've been in the process of like completely redoing their algorithm, and it's frustrating the mess out of me because I'm not getting nearly as many impressions as I used to. So I'm trying to wait till they figure out whatever they're trying to figure out, and then I'll capitalize on whatever this new algorithm is. But it's always been my platform of choice. It's a lot of the way that they have the algorithm written, even now with some of the changes that they're making, You don't actually have to spend decades of your life building a massive audience to be able to get the visibility with a big audience. Now, I just mentioned right now, a lot of people's impressions are down, but they'll get to a point to where things are, air quote, back to normal or whatever the new normal is for the platform. And for a long time with LinkedIn, I could post something and get 10 to 80,000 views per post.
Wow.
And at the time, my follower base was maybe 5,000 people, 6,000 people, 7,000 people.
But the
So I didn't
outreach
have to
went out that
spend
much further. Yeah.
I didn't have to spend decades of my life
Huh.
building that group of people and was still able to get the exposure from that group of people. And I got the exposure from those people
Wow.
entirely free. Didn't have to pay any money for marketing and branding. All I had to be was consistently,
So let's
authentically.
talk about the money though for a second. How much money have you actually raised through LinkedIn? What's the
So
number?
today we've raised 27 million, and
Wow.
I would
In
honestly
actual
tell
dollars.
you,
In
I would
actual
honestly
dollars
tell
coming
you,
across LinkedIn.
I would honestly tell you probably 25 million of that came from LinkedIn or social
Wow.
media. Like Facebook and LinkedIn are the two platforms that I'm on. I'm not really on any other ones. But the majority of like business focused cash
That's
comes from LinkedIn just because it's a very business centric
Wow.
that's
platform.
impressive,
Wow.
Josh. Yeah.
See,
That's
here's
really
a
good.
guy less than 4 years ago trying to figure out how to buy his first deal, goes on LinkedIn, leans
Yeah.
into his business, gets educated, and he's raised $27 million, 25 of it through LinkedIn and Facebook, and owns $75 million worth of real estate.
Yeah.
Thank you. God bless America.
Yeah.
Let's go. I mean,
It
what
does
else is there to
work.
say?
American dream.
Yeah.
Well, I think it goes to speak to Josh too, because Josh, when we met you and we're engaged and stuff, you instantly come off as authentic. I don't know, it's your demeanor, and I mean that can't happen for everybody, but you have kind of that special sauce. I think that makes it work for you.
Well, wait, we met him on LinkedIn.
Yeah.
I started following Josh. I was like, man, this guy's got a big real estate portfolio. Then I saw something about his mastermind or coaching or mentorship program.
Yeah.
And we actually, went through one of Josh's programs and helped us a ton. So,
Yeah. We know all the secrets now.
yeah, hey, listen,
Yes.
and we're on our way.
I've
We're on
got
our
all
way.
the secrets,
We got
but,
the
I
secret
mean,
sauce.
we talked about reality TV shows, right? You think
Yeah.
you think even about reality TV shows and some of the characters that are within those. I mean, they even though it's acting and it's somewhat phony in that sense, they're
Right.
the authentic version of that character within it, like the show
Right.
Friends that went on for
100%.
ages.
Yeah.
Any reality TV show you've ever seen where you're like, I really love this character.
Yes.
They're hilarious, or they're smart, or they're whatever. You think about some actual like celebrities like Dwayne Johnson. Dwayne Johnson connects with so many people.
So many people.
You think about
You're
Kevin
right.
Hart. People are just like, Kevin Hart's friggin' hilarious. I don't care what
Yep.
movie he's in. I don't care what he's doing. He's hilarious. And
Yep.
I want to follow that guy and I want to be involved in anything that I can
That is true.
with what he's doing, whether it's spending money on movies that he's done, whether
Yeah.
it's following him on YouTube, whether it's buying into something that he's selling. Like, I don't care. This guy's awesome.
Yeah.
Or going to one of his comedy shows. Like, I'll spend $10,000 on a ticket to go to his comedy show. I love this guy. You know what I'm
Yeah.
saying?
Sure.
People will become dramatic fans of yours. And that comes from
Yeah.
being genuine.
Mm-hmm.
It also comes from having a face like Greg's. It looks like George Clooney, and you put it on a bus in
Yeah.
Hollywood here, and you drive it
that's it.
around. And
We all got our
Exactly.
crosses to bear.
So
There is
yeah.
1,000% something to be said about physical appearance, for sure. If you're just a really ugly individual, it's really hard to be successful in this
I
space.
just need to work on being
Yeah,
more
that's
genuine.
funny, man. So I know we got just a few minutes here, Josh, but I want to first of all, I want to say thank you. I mean, I can't thank you enough. Like, you've been a great mentor for us, taught us a bunch about raising capital. You and your team helped us with operations when we needed it. So first of all, I definitely recommend anybody that if they're looking at getting involved with you, they should definitely do it.
100%.
I mean, I'm glad we did, and we may join the program again, actually. But you taught us so much, and it was awesome, man. But before we totally let you go, just really quickly from a high level, where do you think the market's going? When are rates coming down? Do you have any predictions? I mean, I know you don't have a crystal ball, but you're the
crystal ball.
$75 million man. You got to
Yeah.
know more than we know. I think you got a good guess.
pressure,
Where's the
Josh.
market going? Yeah, exactly.
That's a good question. I actually just had a podcast interview on my own show literally yesterday with another guy who has about $2.7 billion
Wow.
in AUM. So he knows a little bit more than I do.
Okay.
So I was asking very similar questions. And he was like, man, you got to look at the macroeconomics. And that's what everyone's going to tell you. Like, you look at any of the previous crashes and a lot of them didn't last all that long. I think the longest time we've ever seen like a really like low dip in GDP and just like macroeconomic American market has been 2 years. And we're coming up on a 2 year mark if we haven't already surpassed the 2 year mark of that lasting at this point. On top of that, you're starting to see a lot of the economic trends and financial metrics get to the levels that the Fed needs them to be before they make decisions to actually start raising rates. I mean, rates have been at where they've been steady for at least a year now, and they were originally predicting that they were only going to go up. I think it was from 2.5 to like it was going to go up 50 basis points, and then it more than doubled what their
Right.
projections were.
Did
So
you
no
say
one could have known what
Did you
was
say
actually
raise?
going to happen there.
Sorry, Josh. Did you say raising rates or getting to the point where they're going to lower rates?
Did I say raising rates?
Yeah.
I said lowering rates. So
Lower
getting
rates.
to the
Oh,
point
there's
that
the point
rates
where they're
actually
gonna lower.
start to go down.
Yeah.
Yeah, of course.
Then cap rates will start to go down and a lot of stuff's going to happen. So anyway, there's just a lot of macroeconomic data right now that lends itself to us being somewhat on the cusp and the bottom of the market.
So
Is
would
that going
you?
to be today, tomorrow? Is that going to be the
Right.
end of the year? Is that going to be next year? I don't know. But what I can tell you is now is a prime time to begin positioning yourself to take advantage of the opportunity that's A, already here, and B, that will continue to roll out. For a while, a lot of people really thought there was going to be so much bridge debt that was going to come to maturity
Yeah.
and there was going to be all these fire sale
heard
deals.
that.
Well, that didn't happen.
I haven't seen
didn't
it.
happen.
No.
So everyone that was like waiting on that to happen before they bought a deal, they haven't bought any deals. They're not doing
Right.
anything. But if you look at some of the really big name companies out there, I think Bill Gates actually, we were mentioning him earlier.
Yeah.
I think he literally spent $2 billion or something like that on some real estate. BlackRock is spending $10 billion on more real estate in the U.S. between both the commercial sector and the single family sector. Just some of these larger companies, you're starting to see them funnel lots of money back into the space. And they, being a multi-billion-dollar company, obviously know something that we don't.
Right.
Probably
Right.
have some full-time industry economic professionals
Looking
that
at
look
all
at this
this.
stuff on a
Yeah.
day-to-day basis.
Yeah.
So I'm not saying we should just follow the herd, but what I am saying is the data speaks for itself. We are in a position where if you're not currently taking advantage of where we are today, you're going to look back 2 years from now and you're going to
Right.
be like, dang, I should have bought a deal back then. Just like I'm thinking back in March of 2020, dang, wish we would have bought a deal then because folks that bought a deal literally in March of 2020, 6 months later, were able to like quadruple the
Killed
money.
it.
Yeah.
Killed it.
Yeah.
And I'm like,
Yeah.
wouldn't that be nice? But
Yeah.
you can't time the market. So always be out there, always be looking at like data. Don't just try to make emotional decisions.
Right.
That's another great benefit of the Vivid Vision itself. When you create it from the get-go, is it helps you and your business partners make better data-driven decisions for you and your company, and understanding where you want to go and what you want to do and what that looks like and how you're going to get there. All that clarity. And then the data itself from an economic perspective will help you make better decisions, so on and so forth. So I think if you're not buying now, you need to start.
You need to start. Buy now, get in before the rates come down and
Yeah.
cap rates. And no, I agree. I mean, I think we're out there. We share the mindset. You know, we've been trying to buy a deal since January, but we haven't bought one this year.
No.
And hopefully we'll get at least one, maybe
Been
two
in
done.
escrow.
Yeah, we've been in escrow.
Yeah.
But, you know, I think from our standpoint, it's been like we're aggressively trying to buy a deal right now, but we're definitely not going to overpay for one. And so, like the deal we had in escrow, we couldn't get the concession we asked for. And we probably could have conceded and maybe it'd still be an okay deal. But I think from our standpoint, we were like, hey, let's make sure it's a home run. Because then we know even if this storm continues longer, we won't feel bad if we bought the home run deal. That being said, you're spot on. If we don't buy anything this year and everything gets better next year, we're going to be feeling pretty stupid. So we're out here going, okay, guys, let's find something and let's make it happen. So we'll see.
Yep.
100%,
But-
man. Yeah, another one of the things that the guy I talked to yesterday actually mentioned was even though opportunities are very prevalent right now, it doesn't mean you have to stick with your same strategy that you've always stuck with forever because the market changed. So the
That's true.
strategy that you implement and the way that you go execute and buy deals may also need to change. That was one of the things we realized, which is somewhat why we made the decision to pivot into the RV park space because that industry wasn't nearly as affected and was still making a crap ton of money and you could still buy at good cap rates and everything was not cupcakes and rainbows, but everything was still pretty great in that asset class. So they're still hard and heavy multifamily, and they always will be. That's what they harp on always. Like the fundamentals are still amazing. We're like 4.3 million homes shy of where we need to be.
Right.
Housing units shy over the next couple of years. And builders and developers have decreased their building, like pulling permits and whatnot, by over 50%.
Wow.
So we're 4.3 million shy.
Yeah.
Now all the builders are building less. Like, obviously that bodes fairly well for rental real estate.
Yep.
So their business model for a while was buy the B2C class asset and value add and attempt to hold 5 to about 7 years, sell it and move on. Now they're looking to hold a little bit longer. They're around the 5 to 10 year mark now, and they no longer focus on B and C. They focus solely on A.
Wow.
And the reason for that, I'm like, well, that's interesting. Why is that? And he's like, well, if you think about it, all of the developers that have built all these units that have all come to, like, they've all hit the market and been done being developed within the last 1 to 2 years. They hit the market when the market wasn't very hot, when rents were kind of stagnating or maybe even dropping if they were artificially high in certain areas. And so now those A-class units are having to even drop rents a little more than where other A-class properties are in the market that are maybe a little bit older. Like maybe they're 2018, 2019, 2020 build. And they're already maybe at market because they've been occupied for a while. Well, now this brand new product that enters this market is at a cheaper rate because they need to occupy and fill the place. And so you're like, would I rather stay at the 2020 place or the 2024 place? So I'd rather stay at the brand new spot that's got everything new because it's also it's cheaper. Right. I don't have to worry about funk and stink and other things that other people have that lived in the unit before me. I get to live in the unit for the first time. So some of that is some of the reason that they've decided to invest in the asset class, on top of, because of all those factors and just where we find ourselves now, especially with cap rates going up like they have been. The same A-class assets that they're buying now would have sold for another 50, 60, 70, $80 million higher just a year or two ago.
Wow.
So they're like, now we're buying A-class product. It's brand freaking new. I don't have to do anything. And I get to buy it for what I would have bought a C-class property for.
Yeah.
Wow.
2 years ago.
That's
so
fantastic.
I might as well buy the brand new product that I know is going to appreciate. It's A-class. It's going to stand the test of time. Sure, we're in a rut now, but if I can buy it and it makes financial sense now, because they're so big at this point, they buy a lot of their deals with cash anyhow.
Yeah.
And they're like, so that just makes sense for us.
Yeah.
By the way, I've heard a lot of the big guys doing that. You know, Cardone, Martinez, a bunch of guys saying, hey, I've gotten away from the B's and C's and gone to the A's. And it's always been interesting to us as smaller guys in the sense of, like, you know, we've been trained to, we got to find a B or C property that needs work, that's a little older. We got to fix everything up, and that's how we create our money, right? That's how we create our value. But there is something to be said for buying that quality property, that bulletproof property that's already new, not going to have a bunch of maintenance issues, going to last forever, going to continue to appreciate, has all the amenities in the marketplace. So, you know, maybe it's...
We actually bought our first and only A-class property in, I think it was November or December of 2022. And it's been one of our better multifamily investments. Making money hand over fist. Part of it was the fact that it was an interesting grant product that was like state specific. So it wasn't like the LIHTC program, but it was something like that, where it's affordable housing for the 55 plus community. But the grant ended 8 months after we bought it. And then once it ended, there was literally a $500 a month delta between where we were then to where they could be. And no maintenance no renovations had to be done, except we had to build a new dock because it was close to the water in southern Mississippi. So we put a new dock in. Everybody's happy. Now we can keep it 55 plus, or we can transition it over into just like any age group. A lot of the amenities were targeted to the 55 plus. Like literally, they built a library. Like, who goes to libraries?
Can you imagine?
I built a library.
But it's in there. So anyway,
it's there.
Greg's building one of those in his house right now.
That A-class investment has stood the test of time over the last 2 years with the market dipping. Like we've not had to stop distributions or anything.
Wow.
That's fantastic.
Man.
Yeah. That's great.
Josh, Mr. $75 million man, one of these times we're going to make it out to your neck of the woods. Yeah. We're going to, have a coffee, a beer, a steak, something together, and come check out some of your properties. But again, I want to say thanks for coming on. Thanks for all you've done to help our company and our team. And we're looking forward to having more fun together, man.
Yeah. Thank you, Josh.
Been a blast. Appreciate you guys having me on.
Boom. We'll be back when we got $2 billion worth of real estate. We're coming on yours.
$100 million.
Yeah, exactly.
I'd love it. That'd be awesome.
Let's do it, bro.
Me.
Let's do it, bro. We're working on it. All right, Josh. Appreciate you, man.